This is a long time no create stock pick video. I have been very busy with some things here in Japan, so I haven't produced a weekly stock pick video for I think one or at least 1 week, probably 2 weeks. My apologies. So I'm gonna go ahead and continue with this, and I'm gonna make sure I try to get these out every weekend as soon as I can. I got some extra time, barely, to do it this weekend, so I'm going to go ahead and just get to the point. Let's open our 3 free sources of information for looking at stocks. The first one is actually optional because we're doing technical analysis, but I like to take a quick look at Morningstar to get an idea of what the stock is. Then we're going to go to Yahoo Finance. In finance, there is this thing called interactive chart. You're going to want to go here. You're going to want to change it to the candlesticks, and we're going to want to go out to 1 month. This will give us the daily candlesticks. Finally, we're going to go to stocktA.com and put in whatever stock we want over here, which will give us a list of technical indicators that we will use in conjunction to make our predictions. And I'm going to explain all 5 of these stock picks right here and why we're choosing them through technical analysis. So let's start with DGAZ. First thing you should know about DGAZ is it's not a stock, it's an ETF. What it means is it is tracking something that we can't really trade, which in this case is gas. So it's called an ETN here, Exchange Traded Note. We're going to take a look at its meaning. Where do we find that? Or you can just trust me and I can tell you what it means. It's a inverse, whenever you see INV, inverse commodity ETN. So what we're doing is actually we're buying the opposite of gas. Instead of buying natural gas, we're kind of shorting natural gas, and we're using 3 times the leverage. So this is a very volatile ETN. As you can see, it's gone up recently. We don't really care much about what it means, but it's just good to have an idea. For DGAZ, the reason we're getting in on this is, first of all, let's put that ticker into these 2 services. Alright, so looking at DGAZ, we see this is a gappy stock. We've had a gap between May 22nd and May 26th, and a gap between May 27 and May 28. That is quite common for these leveraged ETNs. What's more important is the candlesticks themselves here. What you're going to see is most of these candlesticks are pretty full-bodied. They're not very thin. We have 1 here that's very thin, and then 2 here that are thin. Now that's called a doji star. Doji star, you can see from my gap game plan course, this is called a bearish doji star, but actually it acts as a bullish trend indicator. So whenever you see a green candlestick with a doji star above it with kind of a gap between it, most of the time the stock is going to continue upward. The theory says that it's going to drop, but most of the time, if you want to see an up gap that widens and then a bearish doji star, about 80% of the time it's going to continue upward. So we saw that here. Here's the green candlestick plus the bearish doji star. The trend continued upward. You can see this more obviously in the line graph, but it continued upward, so we should have got in at that time. You know, if I saw this last week, I probably would have told you to get in. Or maybe not because it's already jumped up there. But anyway, we're seeing something similar again. Green candlestick, doji star, confirmation, and this confirmation is not like this confirmation. It's almost the same. So we're seeing almost the same pattern here. And again, 80% of the time, this is going to continue upward. So based on this candlestick pattern, we want to get in on this stock. But let's check the other indicators to make sure it's not a bad choice. First, we want to look at these numbers here. Are there any large numbers under the column of confidence? There aren't really. You want to look mainly at these 2, where the red and the green meet, or if you see any strong green lines or red lines on this chart. And we don't. So let's skip that for now and go down and look at 2 things. We want to look at the short-term Fibonacci's and the short-term stochastics. They're both bullish. The short-term Fibonacci's means that if we see this stock start to fall, it's going to climb back up. It's going to retrace its fall. The stochastics as very bullish means that usually it means it's oversold, but in this case it means that it looks like it's overbought, but we have confirmed that it's not, that the momentum is going to hold. So we have three very good indicators, the fibs, the stochastics, and the candlesticks, to make us want to buy in on this DGAS ETN. And look how cheap it is. It's also very volatile. So this is a ETN that can make you a lot of money in a short time frame. So that's the first pick. Next, we're going to move on to NTES. What is this? I don't know. I look at the charts and then decide. This is an ADR. If you see an ADR anywhere in the stock, it means that the stock is actually traded, or the company is actually overseas, and we are buying stock in an overseas company. So one main difference here is that there's going to be an exchange rate issue as well. So you see it's $145. We don't know where this is. Where is it? Where the hell is that? Anyway, it's in China. Okay. So if, for example, the Chinese to US dollar ratio goes up, then the stock price is going to go up. So there's that exchange rate, Forex kind of problem embedded in the stock itself. But this is a Chinese stock. I'm going to go ahead and look at the technicals, NTES. Again, NTES. That's NES. That's also a company. Interesting. Okay. So let's look at the candlesticks first. What we have here is a bearish engulfing. In my stock course, you can see bearish engulfing is when a green candlestick's previous candlestick was red, and the red candlestick was smaller than the green. The green engulfs the red. That's a bullish engulfing, and typically it is an indication that the stock is going to climb. So we have that candlestick indicator. Now let's look at the other indicators. Nothing really interesting here. These two numbers are very small. But if you see, everything here is VBU, which means very bullish. I only care about the Fibonacci's and the stochastics. The stochastics here are neutral. Fibonacci's are very bullish. So I'd say we have 2 out of 3 indicators that state, well, not 2 out of 3. We looked at 4 technically. We looked at this plus the candlesticks, plus the fibs, plus the stochastics. 2 of them are bullish. 2 of them say neutral. So we're going to say we have 2 indicators that the stock will continue to climb, and it's at a relative high. I'm going to go ahead and say get in on this. This also has a yield, which means it pays dividends if you hold on to it for long enough. But this looks like a decent short-term trend. Let's ride the trend until you see, you're going to want to watch this for a while, until you see a strong red line, a strong resistance above where we are. At that point you want to get out, but until then you can hold the stock and ride the trend upward. Next is PLAB, P-L-A-B. Let's take a look at what it is. Then let's take a look at the candlesticks, and finally the other indicators. Alright, so PLAB is makes photomasks, semiconductors. Oh, by the way, down here if you're interested in fundamental analysis, Morningstar is very good for this type of research. These green bars typically indicate that it's better than its competitors, while red bars indicate that it's worse than competitors in these areas. So if you're into financial analysis and fundamental analysis, you can check out this stuff. I do that for long-term investments, but not for short-term trades like we're doing today. So let's go ahead and take a look at PLAB's candlesticks. Again, we see a bullish engulfing right here. It's the first bullish engulfing we've seen since this long stream of red candlestick patterns, so it's probably a good time to get in. In terms of the support, we don't have anything interesting up here. This down here is a strong support, but it's way too low to be of any significance to us. The Fibonacci's are very bullish and the stochastics are bearish. So it means that, well, let's look at the stochastics first. The fact that it's bearish means that it's possibly overbought, which means the real price is probably below what we're at. However, the Fibonacci say that even if it does fall to a quote-unquote market price, it's probably going to retrace that fall and go back upward. So even if we're getting in at a high and it falls a bit, we'll probably come back. This is probably going to be a long-term or even intermediate term, long-term or intermediate or short-term bullish trend. And you can see up here, I don't know how they get these numbers, but this this website also predicts long, intermediate, and short trends. It says very bullish for everything. I'm not sure. I wouldn't trust it simply because I don't know where these numbers come from, but obviously this has a strong technical background for a bullish prediction. All right, let's move on to the next one. TMUS. Weird stocks today. I know usually I pick more popular ones. Actually, DGAS is actually quite popular. But the rest of these are, okay, T-Mobile, you probably heard of this. I've never traded this stock myself, so this is the first time I've seen this ticker, but TMUS, T-Mobile, you probably are familiar with them. They're a cell phone company, or cell phone service provider, if I'm not mistaken. Wireless internet, I don't know. All right, anyway. TMUS, let's check the candlesticks, and let's check the other indicators. No. Whatever. Let's go back. My mouse is overly sensitive, but I like it that way. Alright, so here we see almost matching green and red candlesticks. Now, the green is a little bit smaller than the red. Matching green and red don't really tell us much. When green is smaller than the red, though, it tells us that there's probably going to be an upward trend. It's called a bullish harami. Generally, when you see a green after a red, that's not a good rule. So I'm not even going to consider the candlesticks. Let's not talk about the candlesticks. Let's look at this gap here. Between June the 3rd and June the 4th, we see a gap. I see space between these two candlesticks. We also see a very high volume down here. This bar indicates volume. This volume is also much higher than the previous week's volume, so together, if you've gone through my course, you'll know that high volume plus a gap that brings a candlestick outside of the trading region. Notice that before, in the past month, the stock never broke 39. That gives us a breakaway gap. Now, a breakaway gap alone can be an indicator that the gap is going to widen, that the stock is going to continue in that direction. So we already have one indicator that says the stock is going to go up. Now let's check the other indicators. Supports are all too low to be of significance. But the Fibonacci's are bullish, and the stochastics are bullish. So we have an indication that it's not overbought, it's probably not going to fall, and we also have a protective indicator that says if it does fall, it's probably going to retrace that fall and go back upward. So we have three very strong indicators that tell us TMUS is a good stock to get in on. There's no yield, so it's a growth stock. It's good for a swing trade like we plan to do. Again, for this one, to get out of it, just watch this chart. Make sure that there's no resist above us. Once you see a strong resistance level above us, above the stock, you want to get out. That is TMUS. And we're going to move on to Tour. Nice ticker name, but I'm not familiar with the company. Tour. You see how quickly we can do these analyses? 3 sites plus technical analysis, and you can make a trade. Very different from long-term investing where you have to toil over all these financial numbers and ratios. And it can be very profitable, especially if you're playing stock options on these stocks and ETFs. And what is this? We see it again, ADR. So we know that this is not a company in the US. Let's check out where it is. Again, it's in China. So this is a online leisure travel company in China. We see a green candlestick eating a red candlestick. Again, this is a bullish engulfing candlestick pattern. This stock obviously has dropped quite a bit to get to this level. So if we buy, we are buying in on a low. Let's take a look. Support. All right, so this is why I chose this stock. We finally see a very strong support. The last candlestick pattern just brought us right above that support. prior to Friday, that was not a support, it was a resistance level, and we would have not wanted to buy in on that stock because we would have a reason to believe that there's going to be a wall right above us and no reason to buy. But now that we've broken that wall has switched from being a wall above us to a wall behind us, which means that the stock is unlikely to fall below 17.03. So at most, statistically at most, we're only going to be losing 32 cents per share if we buy in on this. It'll hit that support and probably bounce back. That's what usually happens when you have a support this strong. Okay, so we have a candlestick indicator, a support indicator. The Fibonacci's don't look good. This means that if it heads upward a bit, it's probably going to fall back a bit. But because we have that support below us, it's going to be okay. It will probably fall back, hit the support, and bounce back upward. We also have a stochastic that says we are oversold, which means the real price is probably, the market price should be above this number, but it's not. So if we have an efficient market hypothesis, then the stock technically should continue upward. But even if we don't have an efficient market hypothesis, don't worry about what that means. The fact is, most people will probably look at this at the moment and think it is oversold and get in on it, which means there's going to be a shift from selling to buying, which will bring the stock price to a new high. Now again, we're going to just watch and probably get out at this around 20. You can see there's a resistance level right there, but it's small. But if it hits that and it just stays there, just like last time, we're going to want to get out. So that's it for this week. I'm glad I can finally do this. Here are the stock picks again. I'm going to leave them up for a second. If you have any questions, leave them in the comments below. If you want to ask me a question, you can also send me an email, damon@stockbarometer.com. That's it. I will be doing these weekly. I'm going to try my best to get these up every Saturday if I can. But sorry about the last couple weeks. At least you've got 5 good stocks to play with here. Let's do it. Let's make some money.